Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. At the start of the week, the US dollar index broke below its 50-day moving average, trading at 97.77. Traders are weighing the risk of a looming government shutdown and a slate of upcoming US data releases. Historically, the dollar tends to weaken ahead of shutdowns, then rebound once resolved. But this time, risks are greater. A prolonged closure could delay key economic reports, including Friday's jobs data. On Tuesday, WTI crude slipped below $63, extending the prior day's losses. Traders are balancing the outlook for rising global supply against the possibility of a ceasefire in Gaza. Reports suggest OPEC Plus may approve an additional 137,000 barrels per day of output for November. Meanwhile, oil flows resumed through the Iraq-Turkey pipeline after a 2.5-year halt, adding to supply pressures. On the geopolitical front, President Trump and Israeli Prime Minister Netanyahu announced a preliminary deal on a US-backed 20-point peace plan, though Hamas has yet to agree. Gold hit a fresh record high of $3,871 during Tuesday's European session, before pulling back as much as $74 to trade near $3,850. Profit taking after the sharp rally played a role, but so did mixed headlines. On one hand, expectations of Fed rate cuts and sustained dollar weakness continue to support gold. On the other, political risks, including the US issuing an ultimatum to Hamas and renewed worries over a possible government shutdown, press pause on the metal's surge. The yen strengthened for a third straight day on Tuesday, pushing USD divided by JPY below its 200-day simple moving average at 148.39. Despite divisions in the Bank of Japan's meeting summary, investors remain confident the central bank will stay on its path toward policy normalization. Combined with ongoing safe haven demand, this has boosted flows into the yen. The contrast is striking. Markets expect 2 Fed rate cuts before year-end, while Japan's outlook is seen as increasingly hawkish. During Tuesday's European trade, the euro moved sideways around 1.17, failing to build on the prior 2 sessions' gains. Eurozone data showed consumer sentiment improving slightly, while industrial and services confidence slipped modestly, leaving the picture mixed. With political tensions mounting in Washington, the euro is holding its ground, but upside momentum remains limited despite some improvement in sentiment indicators.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.